Okay, important. Today is important. Today is important because the market is not doing much of anything, but we need to figure out what's going on with employment and unemployment. Why do I care? Why do I care about unemployment? Is because this is kind of what caused the mayhem on Monday of this week. Basically, yeah, there was the the Japanese situation, but we need to understand what happened with unemployment, because obviously unemployment means recession. So you got two camps out there. The camps are extremely important for you as an investor. Why? Well, beyond actually selecting names, you need to figure out, what's going on in the economy. Is the economy actually in the process, right? So what's going on? What's really going on? That is always a question. So we need to really, we don't have to focus on everything on the economy because that becomes so complicated, but we should focus at least on unemployment. What's going on with unemployment? Okay, so it seems that it's going up. Okay, we know that. That is not a big deal in itself. The thing is, if it's a precursor to an economy that's going to go in recession, that's a problem. And obviously, if you listen to social media right now, unfortunately, because everything is hyped up, because they want you to watch, they want you to see what's going on. So everybody's saying recession, no recession, what's really going on? Of course, as I said often, I'm here to educate you, right? I'm here to educate you, to teach you what's going on, to explain to you what is going on. Not what is really going on, because we actually really don't know what's really going on. All we have is the data, right? A bit everywhere. And that data is here to kind of guide you as to what they think is going on. We really don't know. As I said before, mentally speaking, the brain has a tendency to evaluate, to project what it thinks is going on, right? So that may not always be the case. And of course, when you find out it is, it's going to be too late. As far as recession is concerned, it's going to take a year, right, before you're going to know that, hey, you know what? We were in a recession a year ago. So that's not going to help us. And it's a government that's putting it together. You could imagine that the current government is not very keen to tell everybody, hey, you know what, we are in a recession. So that's not going to happen. The point is, though, is what do we think is happening? What are the details? What's going on in the news and what's going on in the information that's being conveyed to us? Because what I want you to do is I want you to buy when everybody else is selling and sell when everybody else is buying. Okay, let's not forget that. So, and don't forget, subscribe to this channel, give me a like, give me a link so I know I could keep going. Okay, is because it's not so much that we have more people out there without jobs that are getting fired. What's going on is that we have more people coming in the workforce, right? And these people coming in do not have a job. So at the end of the day, is it that people are getting fired, let go, or is that the proportion of people that don't have a job is going up? It doesn't mean that they will let go. It just means that so where are these people coming from? You mean we have more people looking for jobs, but they were not fired. That's it. So where are they coming from? Okay, and again, we got to be very careful because this is a political environment. And what this side is saying is, if you take a look at the number of immigrant visas issued, it continues to rise. Look at this chart, right? From April 2020, we have gone from 10,000 to 60 of visa application, which increases the labor supply. Now, we're not talking about a bunch of people coming in illegally. These have nothing to do with illegal people, right? These are the legally the legal people coming in, they wanted to apply and they're getting visa. I will tell you from a personal experience that I've got lots of students from overseas that are trying to come to this country and the visas were delayed. Okay, and maybe now they are processing them. Whatever reason, this is 60,000 a month. We're talking for the past 4 years. So, you know, it was 10 first at the beginning, 10, 20. So that's a lot of people coming into the country. So that means that if this is correct, that means that this is not a bad thing, right? Because we just have to find these people jobs. I mean, they don't have a job because they just were granted, right? So but they're fine. The other thing that might be happening, right, is the fact, and again, this is kind of unusual, but basically, let me show you a chart, right? This is the hire versus the layoffs. Take a look at these charts. And this is basically labor hoarding. Job hires has fallen back to levels from 2017. Despite the rate of hires falling below the pre-pandemic trend, basically the rate of hire is falling below the pre-pandemic trend. The labor market remains relatively strong. So why is this occurring? Why is it that the number of job hires has fallen back to levels from, so we're hiring less people, right? Despite the rate of hires falling below. Why is this occurring? You know, according to the Bloomberg article, employers are still scared by the enormous difficulty they encountered trying to hire staff during the pandemic. So, meaning that these people are just hoarding their employees. So if you look at the graph below, it shows how labor hoarding borrows the current job markets. It compares the job hires we mentioned above to the layoffs. So if you add the ratio of the two of those assets, the relationship better. So we look at the ratio. As shown, business are hiring at a lower than normal clip, but holding on to workers. The layoffs line is still decently below the pre-pandemic trend and not really showing signs of turning up. The ratio has turned higher, but it is also below the pre-pandemic level trend. Labor hoarding should offset the lack of new hiring and support a good labor market. However, there are risks that if employers no longer feel the need for labor hoarding in this market, it would appear that, well, you know, they're hoarding onto their client, which is good. So they're keeping they're keeping them. But if they feel that somehow the economy is slowing down and there's more people out there, I'm going to let them go. I don't know. I mean, 2020 was a horrendous event. It was a difficult situation, psychologically speaking. It shook a lot of people. It shook a lot of employers. They're like looking at this thing. But from a bigger perspective, from a bigger picture, you could see how not knowing is a problem. And that's why you've got people on both sides saying, no, none of this is true. We are going into recession. You're just trying to make up numbers to show that, in fact, they're holding on, and we got a bunch of people that are being issued visas. Therefore, it's keeping it artificially high. But eventually, the bottom will give up. That's okay. That's a good story too. We could work with that because that will create volatility. And like I showed you before, I like volatility because it creates me the opportunity to actually buy in this market. Now, having said that, it would appear everything is a bit delayed, right? The market is just itching to do something, right? So what happens next? Well, what could happen next is we're going to be waiting for the Fed to lower rates in September. So you have basically You're basically a month in front of you, right? Every day is going to count. Every day they're going to see lower rates. But the Fed is not going to lower it. The Fed is not going to lower rates. So we're going to hope that they do. And if they do, then we have some sort of a positive situation happening. But if they don't, then the market is going to crater. And if on top of that we've got some negative news, the market is basically on pins and needles. And pins and needles. And I will do a separate video on that, but I will say that be careful because there's some issue with the national debt that are going to come up at some point as well in the future. I don't know when this thing is going to hit. So what do I do? And I will show you what I did. What I'm going to do is I'm going to buy a long dated put on the S&P. Right? I want to buy a long dated put on the S&P because I think that is going to be key. So what do? I am going to take a look at, let's take a look at SPY. Right, let's take a look at the options. Right, so the market, right now, the market is down a little bit. So what we're going to do, we're going to look at trading. Volume, well, they don't have 450. Well, let's try. We're going to buy the 450 strike price. That's what we're going to do. So in 2 years from now, let's get this guy over here. Okay, so that's what we'll do. We'll do the 430. Okay, so we're gonna hedge ourselves at the end, just in case we're doing all this thing and then boom, something really bad happened and the market drops. At least you're protecting your book, and that's what I mean. That is what I mean when I said you need to protect the book against the unexpected. You need to manage the risk, because we're all thinking let's make money, yeah, but you know what? Look at Japan, and one day they lost almost 15% in the stock market. Imagine some of the single names in there. So it's important for you to realize that you need to manage the risk. What do I mean by risk? It's the risk of losing. It's the risk of the losing money. But be careful. When I say the risk, there's the price too long ago, but they had to pay more to entice the buyers. So let's keep that in mind. In the meantime, unemployment is a story that is developing.